once you pin them down with data, like, do you just make a decision on data? Like, algorithms said yes, let's buy, or do you go and like do you assess company financials? Like, how deep do you go in your due diligence over on a company like that?
And this horrifies some of the fundamental analysis. I don't. I hit the buy button. It's
interesting. That's fascinating.
I follow the price action. It's like there are different ways to do this. Some people focus purely on value. Some focus purely on price, which is where I am, and others combine the two, which is what I did with my previous business, and with a lot of my subscribers do. They write in, they tell me that they use my signals to identify opportunities, and then they go and do their fundamental filters over the top of it to to zoom in on the ones that they actually want to invest in. That works too. There's no right or wrong here. It's what works for the individual. For me, I've got 30 years of back testing that tells me that it doesn't matter what the stock does. It's like you don't need to know how a car works to get a great outcome from it. You know that you get in, you turn the key and you can go somewhere. You don't need to know how the spark plugs are working with the combustion, and you don't need to know how the brakes are hooked up with the hydraulics. It doesn't matter. It's the same with a stock. You don't have to be a business guru to know how their sales are interacting with their inventory and what their PE is to make a lot of money from a stock. I know nothing about electric scooters, but I'm up 100% in Vomoto. Doesn't matter. What matters is you've got good process and risk management strategies around it. So you're not just going, oh, look, I'm taking this and a bit of this, and that's messy. But you need to know why you're getting in. So I'm getting in because the buy criteria have been met.
Yep.
And I'm holding because it's staying in an uptrend or it's moving sideways within the bounds of how far I can allow it to move within a sideways range. And then I'm getting out because either A, it hasn't worked and it's come to my exit threshold, or B, it's made a great return or it's made some return and now it's starting to turn lower and it's come to the point where I can't let it come any lower, so I've got to exit. So it's all...
So, okay, yeah. So yours is very much like, so almost to a degree, your strategies, I guess the antithesis, of, say, Warren Buffett, who very much looks at what's the free cash flow, what's the, because he's a value investor. So he's really digging in and going, what's their profits into inventory ratios and all of that kind of stuff. Whereas you're just going, okay, look, you can get in and get out in a really short period of time and just like looking at that trend movement.
It's interesting. I was listening to a podcast the other day, and they had a fundamental investor talking about how he approaches the stock, and he says the number one rule is you've got to understand what the company does. So I've failed that first rule. I know nothing about what it does. Then he said that you shouldn't invest in anything unless you've done a lot of reading and done at least 20 hours of research on it. It's like, well, that's a really hard thing to say to your average investor, because they're at a significant disadvantage if that's the approach they're going to take, because they're competing against guys who've gone to university, have master's degrees in financial analysis, and so the proposition that an everyday person is going to be able to analyse a balance sheet as well as somebody with 4 years of tertiary training, it's and then 20 years of experience, it's a pretty tall order, and I think it can make investing quite inaccessible to a lot of people. It really can scare them off.
Yeah.
That's not to say that what I do is just, oh, look, well, you just buy because it's gone up. It's not at all. Like, I do what I do after I've been in the markets 30 years. And, I do rigorous back testing to see that processes work. But I think, being able to learn about a price-orientated approach to the market and then maybe supplementing it with a bit of fundamental understanding if you're that way inclined, makes the whole process a lot more accessible. It's like, where do you start otherwise? Do you just go, okay, well, send me 100 balance sheets and I'll start going through them? Or you read the paper that said, oh, this stock's doing something. Okay, I'll get the balance sheet and annual report and start going through it. It's a long, hard process. But if you've got an approach which looks at the market from a price perspective, and you're kind of getting a bit of a short list together. You're excluding the stocks which are going down and sideways, and you're only looking at the ones that are going up. So if you can do that, then look, you've already got a head start because you've just ruled out, I don't know, 75% of the market.
Yep.
And so at least if you're then going to take your fundamental approach, you're more concentrated in your possibilities. And and that's how I find the these weird and wonderful growth stories from the depths of the All Ordinaries and the ASX listings that no one's going to know about until they become the next hot thing. By which case the shares are already up 1,000%.
You already missed that best buying opportunities.